Hi everyone, welcome to my channel InfoCraze. Today we will take up a very important topic in accounts, which is ledger. Whether you are in school, college or a working professional in the field of finance and accounts, knowledge of ledger is must, and this same will be required throughout your accounting journey as it's the base for preparation of financial statements. This video will be very useful for having a clear understanding on this topic. Before proceeding further, let me request you to subscribe to my channel if not done yet, so that you do not miss out on my future videos. Now let's get started. As we have studied earlier in my video on basics of accounting, there are 7 broad steps in the accounting process, which starts with the receipt of source document and ends with the preparation of financial statements. In case you have not watched that video, you may please check the same at the end of this video. As our topic for today's video is ledger, we will concentrate on the third step highlighted in the screen, which is ledger posting. Let's start with the basic question. What is a ledger? Once the financial transactions are recorded in journal, the entries thus recorded are classified and grouped into separate T accounts called ledger accounts. The book that contains all set of those T accounts is called the ledger. Thus, ledger is the principal book of accounts in which all the ledger accounts are maintained in a summarized manner. Let's look at a sample format for a ledger account. It has got 2 sides. Left side of the accounts is called debit, whereas the right side of the accounts is called credit. Each of the sides contain 4 columns: date, particulars, journal folio, that is the page from where the entries are picked up for posting, and amount. It is sometimes called T accounts due to its visual resemblance to the capital letter T. Now, let's understand the meaning of the word posting. The process of transferring the debit and credit items from journal to the respective accounts in the ledger is called posting. For every journal entry, posting is done to the respective accounts in ledger book. While posting transactions in a ledger, the word to is used with the account mentioned in the debit side, whereas by is used with the account written in the credit side. Now let's go through the types of ledger. Primarily, ledger is of 3 different types: debtors ledger, creditors ledger, and general ledger. Let's understand more about all these types of ledger. First one, that is debtors ledger, is the book which contains the group of all accounts related to the customers to whom goods or services have been sold by a business in credit. Thus, T accounts of all the customers are included in this. Sum of all the money yet to be received by the business from its customers against credit sales is shown here, which is termed as account receivable or sundry debtors. Second one is creditors ledger, which is the book which contains the group of all accounts related to the sellers or suppliers from whom goods or services have been purchased by a business in credit. Thus, T accounts of all the sellers or suppliers are included in this. Sum of all the money owed by the business to its sellers against credit purchases is shown here, which is termed as accounts payable or sundry creditors. Now, the third one is the general ledger or GL, which contains the summarization of all the ledger accounts of a business. A general ledger account is a primary component of a general ledger, and it records all the debit and credit transactions for that account. The transactions recorded in a general ledger account are related to the 5 accounting elements: assets, liabilities, equity or capital, revenue or income, and expenses. Just to recall, we had studied about normal debit, credit balances and the rules for making journal entries for these 5 accounting elements based on the modern approach. If you have not watched my video on journal entries, you may please check the same at the end of this video. Thus, general ledger accounts are categorized into 5 broad types. These are: number 1, expense account. All type of expenses incurred will have different accounts like rent account, printing charges account, electricity account, maintenance account, and so on. Second one is asset account. Different asset accounts like cash, bank, debtors, plant and machinery, etc. will fall in this category. As we have studied earlier in the video for journal entries, both these type of accounts, expense and asset, have normal debit balances. Thus, the opening balances, if any, will be written in the debit side. For the increase in the accounts under these categories, we will have to debit them, and for any decrease, we will have to credit them. On the basis of these rules, let's try to post some entries directly into the ledger account. Assume a company XYZ Limited have paid printing charges of $500 in cash from its opening cash balance of $900. In this transaction, the two accounts involved are printing charges, which is an expense account, and cash account, which is an asset account. Thus, as expense is increasing, it will have to be debited, and as the asset is decreasing, it will have to be credited. So, the entry will be debit printing charges account and credit cash account for $500, which will be posted in the respective ledgers. Now, let's see the third one, which is liability account. Accounts pertaining to debts or obligations of a firm are part of this category. For example, borrowings, creditors, accounts payable, and so on. Fourth one, capital account. All accounts pertaining to capital infused or drawings will fall under this category. The last one is revenue account. All income accrued or earned will be posted in this account. For example, sales, interest received, discounts received, etc. will fall under this category. All these three types of account, liability, equity, and revenue, have normal credit balances. Thus, for increase in these account categories, we will have to credit them, and for any decrease, we will have to debit them. Like we did the posting for a sample entry previously, entries can be posted in these ledger accounts also. If the company sells goods in credit, the revenue account is increasing, and thus the account will have to be credited. As the accounts receivable account will increase, which is an asset account, this account will have to be debited. Hope this is clear. In case of any doubt, you may leave your query in the comment section so that I can respond back. With this, we come to the end of this video. If you find this video useful, please like the same and share it with your friends. You can also watch my videos on basics of accounting and journal entries. Also, subscribe to my channel for many such interesting videos. Thanks for watching.